Hello, ladies and gentlemen. Good day and welcome to the show. Listen, I'm glad to have you guys here. Today is March 13th, 2020. And anyway, what's going on in the world? We saw the markets march back up a little bit. The Fed has created or is in the process of trying to inject $4 trillion in total. That's the total of everything. A lot of it is repo and term loans, and yeah, they're gonna be doing the equivalent of quantitative easing, and they're buying all different kinds of assets and stuff. The Fed's doing what they can right now. $4 trillion is basically the package, the total of everything, all the different aspects of what they're doing. But I think they're getting ready to lower interest rates down as low as they can lower them. They're trying to use their measures that they were holding in reserve against something that is so overwhelmingly deflationary. And this coronavirus is so overwhelmingly deflationary, it's unbelievable. We are on the front side of it. It's if you picture a storm or a hurricane or something like that, it really is just beginning. We haven't moved through the whole process of this disease until the end, when they finally get rid of it. We're on the front side of this. So we're on the front side of this storm, and it's so overwhelmingly deflationary. There's question marks going through my mind at this point. And I know the Federal Reserve and the world central banks have a printing press, but this is so overwhelmingly deflationary. Can they control something of this size and this magnitude? And there's reasons why I say that. Let's get the chart started right here and take a look. The Treasury Secretary is vowing that there's going to be liquidity in the system. There will be liquidity. It's going to be there. And he's urging the banks to use the discount window to try to get them in there to the feeding trough, It says, we found it quite odd in the last week of February. J.P. Morgan was just a few months earlier received a repo and not quantitative easing bailout for the breaking repo market. Unexpectedly said it wanted to use the discount window again in hopes of breaching the stigma associated with it. They need all the banks in there to that window to just dump money into the system, into the banking system. This is so deflationary, the situation we're in right now. Let's take a look at what it's doing with this deflation to gold and silver, the premier assets. I consider them the premier asset classes that's out of the dollar. And they've been driving it down and driving it down. They've got silver down to $15.58. It's down 22 cents on today alone. Let's take a look at gold. Gold price down $5. It's at $15.80. You remember we were getting up there. We were headed for $1,700, and even gold and silver's feeling this deflation. But I got something important to say to you guys. Watch the bond market, because if investors start to perceive that the Fed has lost control, that the Fed cannot maintain this situation because it's so overwhelmingly deflationary, if they even get wind that there's some sort of default coming, or the reverse of that the Fed's going to have to print so much money that they're going to make the bonds absolutely worthless. Either one of those two directions, we're coming to a situation where we're dealing with something so powerful. This virus is so powerful that if it's not brought under control, it's so powerfully deflationary that if it's not brought under control, it's going to force one of two directions to happen. Either a default, which would render the treasuries practically worthless because they'd have to take a cut on them at the very least. You know what I mean? I mean, some sort of a default of the United States government, which is unthinkable to these treasury buyers. But believe me, this is an unthinkable situation that's happening right now. It's gonna lead to one of those two avenues: either some sort of a default where they only pay part of and everything deflates, or the opposite of that is inflate. They inflate the system too much with too much liquidity, and the treasury bonds, because they're priced and denominated in dollars, they go nowhere. The value of them, the purchasing power of them is lost. Either way, it's a default on them. So if they choose to print to hold this system up, that's one form of default. And the other form of default is where they just can't keep up with this virus, and they lose control, and we spiral into a depression, a very deep, dark, deflationary depression. Either way, they can't keep up. I don't think they can keep up with this. It's too powerful. Look, there's only a very limited amount of people in the United States right now that have it, and there's been a very limited amount of deaths so far. Unless they can get this under control, it could spiral out of control very quickly. Let's take a look now at our what it's doing to cryptocurrency. Is absolutely horrendous. It's cut cryptocurrency in half. You know, it's just about half the price. We're looking at a Bitcoin price now. It was in the 4,000s there not long ago, like last night. You know, it's bounced back a little bit to $5,837, but I don't think this is over. I think you're going to see really tremendous values on cryptocurrency coming up. So you got to keep your eye on that as perhaps a buying opportunity. We haven't seen these kind of falls in gold and silver. Gold and silver's been maintaining the price rather well compared to other things. We're going through tremendous deflation right now. Honest to goodness, a tornado of deflation. Let's take a look at the Dow Jones today. It's up 1,000 points, but I don't think this is going to last long. This is a knee-jerk reaction from $4 trillion worth of monetary support by the Fed. But it's a knee-jerk reaction, and I don't anticipate any more 2,000-point days down, but I anticipate a whole big slew of 500 down days and 700 down days and 900 down days, sort of thing, you know, that all add up together to possibly even more than the big drop of 2,000 points. I think this market's going to get slaughtered for a while. Now, there's a certain point that's coming up in the future, and it's not too far away, where this market, and I thought I'd never hear myself say this, ever, but this market's going to be a buying opportunity. The Dow Jones and all of the markets are going to be buying opportunities. There's a point coming where they're going to fall so much that they're going to hit a point where they become buying opportunities. And I'm keeping my eye on them for that point, but I don't think we're there yet, you know, but I see them becoming buying opportunities at a certain point. You know, I mean, why I said I never think say this is because they've been so overpriced, you know. But I don't care what it is. I don't care. If I see something that's been slammed down to the ground and it's basically been oversold, then it becomes a buying opportunity. When there's blood in the water, that's the time it's a buying opportunity. And I see the Dow the same way, and all these markets the same way. You know, the stock markets. I see them all the same way, as they can become a buying opportunity too, at a certain point when they get down enough. You know, and then this crisis that we're in with this virus, eventually this is going to leave. And when it leaves, these markets are gonna come back at a certain point, but they're gonna get smacked down though nobody wants to mess with them. That's the time you want to get in. When everybody else is done with it, they don't want to ever look at the markets again. That's when you want to get in. Crude oil, 32.78. It's up $1.28 today with the markets, 4.06% up. U.S. Treasuries today. Now this is where we could see a real bust up, a real pop of this Treasury bubble coming up in the future. And this is what could crack the whole system. Because what can happen is if these Treasury yields climb too high, the United States can't service its debt. They can't service their debt at a certain point. This is a real mess, and it's unfolding in real time. And I'm telling you guys, it's hard to stay on top of it because it's happening so fast. But we're seeing Treasury yields starting to rise again today. For the first time in a long time, because we've seen these falling yields. But today, quite a considerable rise in the price of Treasury yields. Investors, I'm going to tell you that they piled into these U.S. Treasuries, but they could pile out just as quick because capital is right now is terrified and it doesn't know where it wants to go. Let's take a look now at the U.S. dollar index, 98.16, and we see the dollar rising. It doesn't surprise me. They're using it as a safe haven asset right now in this storm. This is a financial storm, and I could see it getting an awful lot worse really fast because this disease moves fast. And the potential it has when you consider that there's less than 2,000 people in the whole of the United States that have it, but there's 330 million people there. Let's do the math. How many times does a couple thousand divide into 330 million? And you can see the potential for this problem to grow that much exponentially worse. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.